For silver, my first level was don't be surprised if it gets to 31.50 again. And it's pretty much there now. Don't be surprised if silver goes to 29.50. Looks like it's $30 basically. Don't be surprised if silver gets to 30 and goes higher. Okay. Be a little concerned if it gets down here. But if you have some money in your pocket, that's a really, really good place to buy, because when it gets down here, it doesn't stay down here long. And I believe if it were to go sideways and go lower and break this yellow line, I think if it gets down here, that's when you're going to start seeing the EFP start to switch. You're going to start seeing the CTAs get short. I want the CTAs to get short. And then you're going to start seeing this market decouple from gold again.
Gold prices are experiencing a modest rebound early Tuesday, commonly called a dead cat bounce, after dropping to a two-month low of $2,611 last week. Investors are now closely watching speeches from several Federal Reserve policymakers scheduled for later today, looking for any indications about potential interest rate cuts. Market analyst Vince Lanci notes that if gold retreats further to around $2,531, it should be viewed as part of the natural ebb and flow within a more significant uptrend. While gold appears set for an eventual upward move, this trajectory may not unfold immediately. Since the U.S. election, gold's price decline has reflected broader market reactions as much as political specifics. Meanwhile, silver demand is rising globally, particularly within the solar industry, as countries expand their solar power capacities, report Heraeus Precious Metals analysts. This industrial demand supports a positive outlook for silver prices. Lanci also outlines a technical price range for silver, which tends to be more volatile than gold. He suggests that silver could reach around $31.50 with possible short-term pullbacks to approximately $29.50 or $30. According to FX's Street data, silver is trading at $30.34 per troy ounce, a 1.49% decline from Monday's price of $30.70. Silver prices have surged by 27.08% since the beginning of the year, reflecting solid gains despite recent downward pressure from a strengthening U.S. dollar. As silver continues to hover near $30, many analysts view this level as a crucial support point. Market participants are expected to watch closely, as any sustained movement below $30 could signal further declines. A rebound above this level could reinforce silver's bullish trend in the face of dollar strength. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Start with gold. All right, so here's the bad medicine. See this here? Here, let me go to the monthly first. That's me replicating a Michael Oliver channel, right? And it's very big picture, but it's big picture stuff is very useful when you're trying to find your way off of a script. Now, this is a line that I had drawn before because, I forget why now, but if I draw it and I leave it there, it's probably important. It looks like this is obviously a little bull flag, but I probably drew it because the BIS capped it. The market's coming off. Do not be surprised if it goes to 25.31. Don't be surprised. It's okay. It's going to happen. We were above, right? This is the channel. This is the channel going to infinity. We're going to infinity, just not this week. All right. So that's a monthly channel, right? So do not be surprised. Silver, so it's pretty simple, right? If it goes up, great. But if it goes to 25.31, don't be surprised. Am I short? No. Was I short for a couple of days? Yeah. Will I get short again? Yeah, but not right now. This is crazy. I'm just watching it. It's too euphoric for everyone. All right. Silver. Here's a similar channel in silver. Okay. But silver is more volatile, right? Also, silver is being, ringed and twisted with the whole gold silver spread and sell the silver to buy the gold stuff, which I believe and I know is happening. Okay. So what I've done here is I'm trying to give you a picture of volatility. Let's focus on the yellow one, right? The yellow channel with the yellow dotted line in the middle. Silver is inside the yellow channel on its trend higher 60% of the time, right? Okay. So if you're having a conversation with someone at a cocktail party, where's silver? Well, it's going to go this way, give or take, right? It's going to be in this channel, give or take. Right? So 60% of the time, that's where silver is going to be, right? Now, if you were to say, well, I want to know where it is almost all the time, that's 80% of the time or 90% of the time. And you say, well, it's not going to go much higher than this red line. And it's not going to go much lower than that red line. And there's silver. Now, silver is more volatile than gold. So for silver, my first level was don't be surprised if it gets to 3150 again. And it's pretty much there now. But because it's more volatile, I have to like make these dotted lines. I have to make them wider, right? So don't be surprised if silver goes to 2950. Looks like it's $30 basically. Don't be surprised if silver gets to 30 and goes higher. But if you have some money in your pocket, that's a really, really good place to buy because when it gets down here, it doesn't stay down here long. And I believe if it were to go sideways and go lower and break this yellow line, I think if it gets down here, that's when you're going to start seeing the EFP start to switch. You're going to start seeing the CTAs get short. I want the CTAs to get short. And then you're going to start seeing this market decouple from gold again and start to get bid. Anyway, that's my take on it. Gold will be coupled with the dollar again because the West is the buyer. When the West buys, they look to the dollar to decide if they're going to pull the trigger or not in gold.
According to Lanci, silver may experience short-term downside pressure if commodity trading advisors initiate short positions. However, such activity could lay the groundwork for a significant rally, potentially propelling silver prices toward $40 within a few months. Interestingly, silver has shown resilience compared to other commodities, with the silver-to-commodities ratio currently testing a critical technical level, the same level reached in May 2011 when silver peaked at $50 per ounce. This ratio has approached this resistance zone multiple times in recent years, highlighting a recurring pattern of strength. This technical resistance zone is noteworthy as it indicates that silver maintains a robust position within the broader commodities complex despite recent price fluctuations. Silver's ability to hold firm against other commodities suggests underlying resilience and strength within the precious metals market. This relative strength, combined with the potential for CTAs to short, could create a unique dynamic. While silver may face short-term downward pressure, its inherent stability and strong technical positioning set the stage for an upward breakout. Let's get back to the interview.
BOA put out their systematic flows analysis, which basically covers CTAs. And CTAs, if you're not familiar with them, in terms of their protocol, they're basically high net worth individuals who have their money with advisors who trade using algorithms for the most part. So this is what BOA says about CTAs. In commodities, our model stopped out of its stretched long position after futures declined by 2.7 following the election. Price trend remains elevated, and some CTAs may not have fully sold out of their longs. It's very revealing. The small money, the hot hedge fund money, the CTA money, the retail money sold post-election, which is what we thought would happen. And you may remember last week I sent out a report, for an institutional report from Goldman, their comment about being CTAs are selling, but we don't see macro discretionary selling yet. So this confirms that 2 banks are seeing CTA selling, which means the tourists are getting out, and the macro discretionary guys have not sold as of yet. Could be good, could be bad, but just know that the first leg of sellers has hit the market. And that little green down there, that's saying, if I can make this bigger, that doesn't get any bigger. That means that if the market rallies, they're going to buy again. They're done selling. Now, silver, they may get short. And I'm talking to you as a silver person. I want them to get short because a couple months from now, that'll bring silver to $40 without a problem. We have that full analysis and it covers every market. Moving on to the next one. RBC has been surprising lately. And that's only because I haven't seen a lot of their stuff recently, but very thoughtful pieces coming out on precious metals recently. Commodity survey, precious to me. While directionally many of the undercurrents continued month over month in October, the positives, precious metals were up nearly 18 billion in money coming in, far outweigh the negatives. All other assets on a net basis amounted to minus 10.9 billion, pushing total commodity investor assets under management tracked in this piece to nearly 590 billion. Unsurprisingly, the positive tailwind is really about gold, given its run of records. Even with the post-election reset, our conviction remains for 2025. Now, they get into their it's a lot of very easy on the eyes charts to read, showing you that basically as the East has stopped buying, the West has bought. And that trend seems to be in place despite the post-election behavior.
As gold and silver navigate short-term fluctuations, their resilience in the face of broader market dynamics continues to draw investor interest. At the same time, gold consolidates amid potential rate adjustments, and silver's strength, mainly due to industrial demand, positions it favorably for potential gains. Investors may find strategic opportunities within these pullbacks as long-term bullish trends remain intact. How could the interplay of technical support levels and industrial demand influence silver's momentum in the coming months? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.